In banking, GRC is the difference between quietly preventing a crisis and making tomorrow's headline. In this first module, we are going to lay the foundations, the purpose of GRC in cybersecurity, specifically in financial services and banking. A lot of people hear GRC and think of it as a compliance chore. But in our industry, it's far more than that. Governance, risks, and compliance work together to give us a clear direction, a realistic view of our risks, and the ability to prove we are meeting our obligations, not just to the regulators, but to the customers and to the market. We will explore why GRC matters, how it protects not just systems but trust, and what it looks like when it's working well and when it's not. I'll be bringing in real banking incidents to show how governance failures can lead to technical disasters, how risk blind spots can cost millions, and how compliance gaps can invite regulatory penalties. And by the end of this module, you will see that GRC isn't a nice to have. It's a core of any effective cybersecurity strategy in the financial world. So let's get on. Now, let's talk about why banks do information and cybersecurity in the first place. At its core, cybersecurity protects the mission of the bank, whether that's safeguarding the deposits, enabling global payments, or maintaining the trust. And in bank, trust is everything. GRC, governance, risks, and compliance, helps answer the five critical questions that every bank faces. What security controls do we need? How much of them is enough? What's the right budget to allocate? How will we implement them across the systems, the branches, and the vendors? And most importantly, last but not the least, are we actually doing what we said that we would be doing? Answering them, answering these questions in banking isn't just the guesswork. You need to align with the regulatory mandates of the Financial Conduct Authority, the Prudential Regulatory Authorities, the GDPRs, and the PCI DSS of the world. Your board's formally declared risk appetite, often overseen by the risk committee. Internal governance structures that span risk, audit, compliance, and information security. Take the 2021 Capital One breach. Poorly configured cloud systems and gaps in the risk governance led to the exposure of over 100 million records. Not only did customers lose the trust, but regulators hit them with major penalties. GRC is about avoiding exactly these scenarios. So, yes, we do cybersecurity not just to check compliance boxes, but to prevent disruption to the bank's mission and preserve trust in the financial system. So, here's the crux. We do not do cybersecurity just to tick off a compliance checklist. We do it to protect information, which is the core of banking. In a bank, information needs to be confidential, like customer accounts, balances, or trade strategies. If they are leaked, then the trust is gone. Then the information needs to be accurate. Think of foreign exchange trades or loan approvals. One bad data point and you are risking regulatory fines. And then finally, availability. If your online banking or core ledger goes down, customer panic and headlines write themselves. So the each piece of CIA triad, that is confidentiality, integrity, and availability, is mission critical in banking. Take the RBS's IT failure in 2012. Customers couldn't access funds for days. Payrolls didn't go through. Mortgage applications stalled. That wasn't just a technical issue. It was a GRC failure, impacting availability and targeting regulatory investigations. So when we say threat, we mean everything that can mess with these three pillars. accidents, outage, ransomware, fraud, you name it. If it can disrupt the bank's mission, it matters to cybersecurity. Let's go a level deeper. What can actually go wrong? In cybersecurity, we always talk about two things, that is, threats and vulnerabilities. A threat is anything that can damage the CIA triad, that is, the confidentiality, the integrity, and availability of systems. Think about ransomware, insider fraud, phishing, or even a natural disaster. But here's the catch, a threat alone isn't enough to cause any harm. It needs something to exploit, and that something is called vulnerability. For example, let's say a bank's ATM system gets hit by a distributed denial of service attack, the DDoS attack. If that network is segmented, has load balancers and offline fallbacks, it might just be fine. But if there is no resilience built in, boom, availability is gone and customers can't access cash. This played out in Lloyds Bank 2017 DDoS attack. They avoided major damage because controls were in place. That's why understanding where we are weak is the first step towards building a real GRC program. So, when we say threats and vulnerabilities, we are talking about how real world chaos meets system weakness and why that matters more in banking, where even a brief outage can ripple across the whole economy.